Well, good afternoon. I think it's just past midday, so let's begin proceedings. My name is James Jochen and I'm Chair of Spirit Telecom, and I wish to welcome everyone here today. I understand there's a few hundred people attending, some existing shareholders, some new to the Spirit business, and I wish to thank you for your time. We wanted to hold this investor presentation because a lot has happened with the Spirit business and strategy over the past 12 months, and we wanted to share that with you. The clear takeaway message from today is that Spirit has diversified its product offering, and we are no longer purely a super fast internet business. We have become an integrated IT services company. We are high growth, we are a challenger brand, and we are a nimble competitor. Today, you will see how we've executed upon this strategy. We have positioned the company into defined segments in high-speed internet, cloud services, security, and IT infrastructure as a one-stop shop to Australian businesses, schools, hospitals, and aged care providers. In addition, over the last 12 months, we have developed in-house our own digital sales platform that provides service qualification and sales in a matter of seconds. And Sol will provide more details on this innovation and will actually take you through a live presentation. So, looking at the agenda, Sol will provide an update of the business with an overview of our core skills. Next, we'll have Katie, who was the vendor and now CEO of the Trident business, the IT services company that we acquired over the last few months, and something that we're very excited about. She'll explain the IT services business and how it integrates with our data side of business. Next, we'll have Mark, our CEO, and he will give us a detailed description about our network and SpiritX, and also how we've successfully integrated the number of acquisitions we've made over the last 12 months. Sol will then come back and wrap up and take Q&A. And finally, we know your time is important, so we've allowed about 40 minutes to an hour for this session, depending on Q&A. There is a chat box located on your screen, so please lodge a question at any time. I trust you and will enjoy today, and I'll pass over to Sol to begin the presentation.
Thank you, James, and want to welcome what looks like over 350 to 400 registrations for this session. Tremendous to welcome you to this afternoon. And let's kick off probably the first part with a bit of a trading update that we announced to market yesterday. Most of this is on market already, but there's some components around sales that I'll touch on as well. First of all, it's very pleasing and a very strong result through April, and in particular through the Jan-April quarter, which I'll take you through. The April number is made up of two components. The first one is recurring revenue. So these are contracted clients who continue to provide income and annuity revenue stream into the organisation. The second is solutions and project and IT revenue. So that's a component of some of the new acquisitions that we've had and some of the Spirit IT work that we do as well. But what you've got there is a really diverse mix of recurring revenue and growth segments that are showing really strong highlights. On the Jan to April result, really an important time to reflect on the growth that the organisation has seen, not just in revenue, but new products as well. In particular, we've seen an uplift to $14.3 million through the previous year-on-year quarter, which is a tremendous and strong and resilient result, particularly in an economic environment that has been challenging across the business community and obviously for families and businesses as well. On recurring revenue, and I will continue to focus on this point because in my mind, businesses and portfolios are built on recurring revenues. When you know you've got the cash flows coming, when you know you've got contracted clients, that's a tremendous way to see a valuation in a portfolio, particularly in growth segments. And I guess the final one is that solutions and project revenue. And that's where we've been able to wrap up not just the new infrastructure and cloud-based services, but also internet services wrapped up in them in one integrated form. For those who aren't familiar with the company, a quick recap on a little bit about our size and who we are. So circa 70 mil market capitalisation. We've seen a tremendous volume come through the stock, really good liquidity over the last month as the message around being Australia's leading provider of IT and nimbleness is resonating through the organisation. On the investor and the register side, I welcome 7 new institutional investors who came through the last round, which shows tremendous support for the organisation and its strategy, and also its potential acquisition cadence coming through as well. Also, we're also backed by Australia's largest bank, who recently, as part of the institutional investors, also lifted our debt facility to just shy of $11 million. So they have enormous trust in us because we've shown and delivered results, not just through talk, but we've executed through these numbers as well. So that was a great result for the organisation as well. Obviously, you'll see through the last 12 months, we've acquired 7 organisations in high growth segments, in particular high-speed internet and IT services. We continue to do that. So I know some of the questions will be around when is the next deal, what is our deal cadence, and I'll talk through that in sound bites through the organisation, through this presentation, excuse me, and then take Q&A around that. But I can assure you, we're very active at deal level. We're very active on the DD side with multiple acquisitions. It is a time though, where patience will reward shareholders. You know, the types of deals that we're seeing today are far better value than we saw 6 to 8 weeks ago. So we will complete acquisitions that are right price for the organisation at fair value multiples as well, and that have strategic fit. I can assure you of that. Just to move on to the B2B revenue side and dive a little bit deeper into that part of the business. Some of you who may have been shareholders for a long time and new shareholders, just to touch on this, we are now predominantly a leading B2B leader in IT services. So around circa 87% of our revenues, with 7 mil of those coming through as recurring month on month, every month, and now through B2B channels. Now, what does that actually mean from a customer perspective? So if you were with a shareholder in the organisation 12, 18 months ago, we would walk in as a customer and provide a high-speed link at a gig service at, say, a price point of $700 to $1,000. And we would leave that organisation. That doesn't occur anymore. When we provide that high-speed link, what we're able now to do is cross-sell a cloud-based service with recurring revenue, a security patch through the Trident business. We then also can provide infrastructure in the public cloud or the private cloud. So the thing that I want to articulate today is the importance of high-speed internet to allow you to cross-sell those services. We're in a particularly unique position to execute in the B2B market when we add a high-speed link into a school, into an aged provider, and then say we can secure you. You've read the AFR today. A very large organisation was hacked overnight. Hacking and that security part of the organisation is becoming vital to secure these links. And in that context, we can now provide security patches, security audits, penetration testing with those high-speed links at the same time. So we no longer walk in with a high-speed link. We walk in with multiple aisles. The way I like to describe it, we're becoming the IT&T Officeworks of Australia with multiple aisles and positioning ourselves into those growth segments. So really proud of the uptick in recurring revenue at 92% to 7 mil. Really proud that we're also adding the solutions over the top. So not just the recurring revenue in, but we're upselling infrastructure and cloud-based services once off through the Trident business that Katie will talk to in a minute as well. A little bit back about Spirit. We've touched on some of these themes, but over the last 12 months, we haven't just diversified our portfolio of products or our geographies through Brisbane and Sydney. We've also changed the entire product mix that I've touched upon. So the thing that is vital and the salient item for investors to think about when they're looking at Spirit is you don't just have a defensive business. You have one that is defensive because it has diversification, not just through SMBs, but hospitals, schools, aged care providers, essential care providers during this difficult time in the community. The other piece is we have really strong cadence on the IT&T side. And I touched upon it earlier, we have a balance sheet strength of circa $15 million to deploy. So for a 70, or depending on what the share price is doing at the time, for a $70 million capitalisation, we have 15 million to deploy for organic growth and also for acquisitions at this time. Our network, which is a unique asset. So we own our own fixed wireless network. The way the easiest to think about it is there's fibre in the ground, we deploy fibre in the air. The differentiation point there, and Mark, our CEO, will talk about it shortly, is that we can deploy a 1 gig link in 5 days. And Katie will show an example about a Melbourne school who had their link created in 5 days. Additionally, we're a modern distributor. So we've launched our own digital platform that I'll provide a demonstration in the next few minutes. So we've added product, we've added portfolios, and now we've focused on distribution, and also we're obviously acquiring businesses with a really strong balance sheet. Symmetrical speeds. So what does symmetry mean? It means that the speed of the internet is moving at the same speed going. Why is that important? Because businesses are moving files. As an example, to move this presentation into the ASX, which was a 5 meg file, I needed symmetry through my actual internet link as well this morning. So what are we? We're a one-stop shop and an integrated form and a bundled provider. For the customer, what does that look like? That means one bill. It means one service level agreement. It means one account manager, which is vital. So a number of the schools that we've been able to cross-sell to, and this is their narrative and their words are, I'm glad I can speak to one person and I only have to deal with one bill. That is the value proposition. Finally, as you can see on the, on the pie chart to the right-hand side, we're resilient. We've got an important mix of different portfolios and mixes. So I can assure you we're doing everything to continue to diversify and grow this business. We are certainly a growth story. On the B2B side, and this is a new slide, we didn't talk about this in the announcement yesterday, really important to focus on that the sales coming through, so total contract value or sales continued to grow through the last 4 months. Now, what does total contract value mean and why is it important for the customer, but also for the organisation economically? Well, on average, we're signing 36-month contract for our data plans. Now, you might say, well, that's great from a commercial perspective, but what does it mean in terms of bundling? What it means is that 36 months, when we sell the internet data link, allows us 3 years to have a conversation and cross-sell our IT services. So increase that invoice from $800 a month up to $3,000, $4,000 across multiple sites. So what you have here is one of the ways that we're dealing with churn risk, and our churn is not a material issue in our business, is we're not just discounting pricing. We're adding over the top services. We are providing network infrastructure into those organisations. So those organisations are no longer just getting a data link. And that is vital for cross-selling. That's why we're seeing organic growth, and we're one of the few telcos that are seeing organic growth through our organisation, because we're bundling those services and reducing the churn risk by 2 and 3 products coming through. And when we sign long-term contracts, a total contract value, we've got 3 years to have that conversation either with the CIO or the manager and owner of that business. So this is a new piece of data that we released to the market today, and I really wanted to explain it because the strategy here is all about execution. It's easy to put it on PowerPoint, but what this demonstrates is we're executing. We are cross-selling and managing churn through the bundling of the product. So it's not just bolting on Trident as a business and as a division. We're bolting products together and making customers more sticky. Finally, and we've talked about this, so I won't dwell on this, just to reflect on the growth that we've seen over this period on a year-on-year basis. To have a small cap of this size generate over 146% of revenue and diversify that, I think that is a really strong result to say we're right in the hotspot of where growth segments are and we're executing very, very well. So I know some of you might have seen the strategy outlined in digital form or in PowerPoint before. This slide is beginning to tell the market that we're executing, and we're executing efficiently and with great cadence, organically and through acquisition. And very proud that recurring revenue is also up 60%, locked in contracts and a good portfolio of customers as well. So what does the organisation actually look like structurally now with the acquisitions that we've completed? And really there are 3 key parts. what I call Spirit X as it's known, which is the modern distribution arm of that business. What that is doing is generating leads, and it is our sales and distribution arm. And the best way to explain that is to actually show it to you, and I will do that in a minute. But to give you some statistics, that's got about 100,000 addresses we can sell to. But we only just announced to market that the NBN Ethernet, Enterprise Ethernet product will go into that range shortly, and that will increase the address size to 600,000. So why is that important? It gives us more market. But the minute we have access to 600,000 business addresses to sell to, we're not just selling data. We are then having a conversation around their security. We're then having a conversation around cloud services and IT support. All those little organisations, be they SMBs or hospitals or schools, allow us to cross-sell a variety of products in there as well. And we will be launching the IT services into SpiritX over the coming few months as well. Right now, it's just a data platform. It will become a marketplace. Spirit NIT&T, that's where we execute our high-speed fibre links. So there's about 250 sites nationally, and I'll show you those online in a minute for that SME market. And Trident, I won't steal Katie's thunder, I'll let her describe, but that is our complex solution business and very heavily focused on schools, education and aged care. We bought them and acquired them because of their expertise in those essential service providers. And you can now see the logic of the result during a difficult economic time with that particular organisation joining the Spirit family. So SpiritX, what is it and how does it work? I think we can talk through the slide and I'll talk through some of the stats, but I will move into screen sharing mode and hopefully Zoom is kind to me in this moment and with no hiccups and show you how it works for a customer. But some really simple statistics. NBN will be released towards the end of the month. That'll give us 500,000 new locations in SpiritX. Already the platform is from January or early January saw 6,000 unique service qualifications. So unique is critical here. That's 6,000 businesses or organisations trying to look for services within this platform. We have their data. We know who they are, and we also have a platform now that gives us the intellectual property and the analysis of where there are hotspots for markets. What does that mean? That means we can sell our product. We can sell a third-party service. But more importantly, when we're making network CapEx decisions, we know where the hotspots are as well. So see this as a sales tool, but see it as a piece of intellectual property that we've built in the organisation as well. So why don't we move away from the PowerPoint and let's try to bring it to life for you on screen. Hope you can all see that. What I'll do is I'll do two parts for you. I'll show you what a customer is seeing through. So if we go onto the Spirit website and we're looking for a business internet product, we then are presented with a Spirit range of products. So we will then inquire and move to a business development manager who will look after you, or we have the option of checking the address and moving to SpiritX. At this point, we collect your information. Not one point of the service qualifications provided without information around that organisation. So you thought about those 6,000, we know who they are, we have them in our CRM. So quite simply, you put your email address in, we put our business name address, and then for this, I'll show you a couple of examples, but let's put 90 Collins Street in and see how easy it is. So in seconds, it has brought up multiple providers, right? And there you have on top the Spirit services leading the pack based on price and their availability at 90 Collins Street as one example. But let's just say we weren't able to provide those services to that building or that floor. Well, then we have a variety of other products and they are third-party products. So as an example, the Spirit products are sold at a 74% gross margin. We sell the third-party products at 40% margin. And that's okay. If Spirit can't get there, then another product will. But how easy is this to use? All the business needs to do is place the order, move through there through 3 clicks, and it will generate electronic order. Not one business development manager has touched that order, right? That gives us enormous gross margin on the selling side. So that's SpiritX. In the next 2-3 months, we'll also add the IT services into this. But to show you the power, I do need to give you a glimpse of, and I hope once again, screen sharing is kind to me, of the engineering view in terms of what has been achieved here. One of those service qualifications used to take one person 48 hours to complete. But now, with SpiritX on the engineering side, let's put that 90 Collins Street, and we'll do a Sydney address in a minute, in again. And this is the view that I have as the Managing Director to show you the engineering scope of what's been achieved. So what you will see here as I open this up, the same products come up. But let's turn on a view that customers can't always see, but what the engineers have built in an engineering view. What you'll see to come to life is the network under the ground and the network in the sky. So all of the purple and red dots are fibered buildings. All of the red lines at the top are the Spirit network coverage, what I call a hamburger of networks. So what we are is the fibre in the sky, and those other buildings are the third party products that we can resell. So to generate all these products, what we've done is we've aggregated all those additional products across locations in Australia. Once NBN moves into here, we'll have 600,000 locations to sell data products to, but also, and I stress this, to cross-sell the IT services in to increase that product bundle size and that ARPU. For those in Sydney, happy to choose an address. Let's go with 100 Pitt Street, in fact that exists. There you go, there's a fibre product and you can see the Sydney network coming through as well. Obviously that view is not available to the customer and I'll turn that off, but you can see the differentiation. We can also move that on the map, so it'll service qualify in seconds. So what it's done is, it's using topography data to actually allow that customer to acquire. So I'll just go back to the presentation, and once again, hopefully Zoom is kind to me. Can't seem to get it. There we go. So that was SpiritX. In terms of the distribution of it, there's three arms to SpiritX. There is a reseller wholesaler version. So there's about 150 partners using the version that you just saw earlier, and wholesalers who take the product at a discount and then put their margin on top. They're typically IT service providers or architects who are reselling the product, and SMBs or direct, so moving through the website. In terms of our typical month, we usually move, the wholesale and resellers typically take 30 to 35% of the flow, and direct to customers with our brand make up about 70 to 75% of a typical month. So what you've got there is really strong brand activity coming through the business as well. And I'm proud to announce today, I might have touched on it, we will move to our first national marketing campaign in late May, promoting the SpiritX product through Sky News, elements of Channel 9 and the Fin Review as well. I now welcome Katie Bentley, the CEO of Trident. Well, welcome, Katie.
Good afternoon, everyone. So who is Trident Technology Solutions? We're a 33-year-old organisation. We provide end-to-end infrastructure, mobility, security, data centre solutions and managed services to education, health and aged care. We have a strong customer base, a profitable business model, a fast-growing annuity revenue stream, secure long-term contracts, an ability to be agile, and a history of being nimble. We're currently concentrating on providing high-speed internet and secure internet to our existing clientele and new clients in our verticals. Our partnership with Spirit enables us to provide our customers with a full set of proven technologies. So Gartner predicts that by 2022, 80% of organisations will have some form of cloud solution, and 50% of data will be managed outside the cloud, on the edge. So our partnership enables us to provide these technologies now. We're poised and we're ready. So what has the acquisition of Trident and Spirit done? It's been a very efficient and well-executed acquisition by an experienced executive team. We knew that the Spirit pillars of transparency, old-fashioned customer service, and agility mirrored our own. And the original vision of creating a national, fully integrated IT&T service provider has begun. The Spirit portfolio naturally extends our ability to increase our footprint into our existing verticals and offers us a really strong lead into new clients. We're building a platform of spirits to stay connected, to collaborate, and to enrich. So what is the opportunity? The opportunity is in the simplicity of the cross-sell. Through combining the traditional Trident product set with the Spirit product portfolio, we're going to own not just the road, but the journey. The journey will see us move up the East Coast to become a national IT&T service provider to provide keyboard to cloud solutions wrapped up with high-speed, secure internet. But our key differentiator is that unlike our competitors, we own the network. It's our fibre in the sky. So the new Trident, powered by Spirit, will increase our share of wallet through us inserting ourselves in the customer journey, not just the toll gate. We're not talking about just clipping the ticket, we're talking about owning the roads. We will provide the solution or we will create it. Of course, all of these opportunities are only valid if the customer wants it. But we're finding that they do want what we're offering. They want a national IT&T fully integrated service provider. And I want to share a couple of examples with you. Loretto Mandeville Hall Toorak, a long-term 24-year Trident client who purchased our full product suite from mobility, data, security, and managed services. We offered them a redundant internet link. It was installed in 5 days, and the school was so impressed by the speed that after 2 weeks, they changed this to their main link. These kinds of comments are echoed in some of our health providers. One of our aged care providers, again, a 20-year client who purchases our full portfolio, is very unhappy with his current provider. We spoke to him about what we could do and are now offering him a full MPLS network, which is a Spirit solution. Our customers want one partner to look after their whole journey. And upon reflection, what has been learned over the last 3 months since on Valentine's Day, February 14, we merged? Well, I found that customers are actually very unhappy with their current internet providers. They're even willing to break contracts. They want relationships with their internet provider. They want to have one partner to offer all of their IT needs. Our competitors in the IT&T space do not own the network and they are not as agile as we are. And starting with a simple offer of a redundant internet link opens us up to so many more possibilities within our verticals. So we're now a fully integrated IT&T services company. We're ready to take our customers on the journey with us. The opportunity is in the simplicity of the cross-sell, and we've begun the execution, and I hope you will join this journey with us. I'd now like to introduce you to Mark Diagati, our Chief Operating Officer, who will present the operational updates for you.
Thank you, Katie. Yes, Mark Diagati, the COO, also the techie guy within the Spirit Trident Group, but I'll try to keep it short and share with you some of the things that are happening under the bonnet, which we think are pretty important. So, as you've heard already, a lot of products and a lot of growth in terms of the market we can reach and our presence across the country, and that's been driven by 7 of the acquisitions to a certain extent over the last 12 months. The acquisition part is the easy part. The hard yards come after that. And we've been working hard because it's very key and important for us to make sure that post-acquisition, we get to a streamlined state and we get to a simple state and don't end up with a lot of spaghetti. So I just want to talk to you about five key areas that we've been working on. That's billing and customer systems, ticketing, our network, brand, and our financial systems. Billing, it's very important to have all our products and services on a single bill. And on the customer side, putting the customer at the heart of everything that we do. So there's a lot of focus in that area. Ticketing the same, when customers do need to talk to us for whatever reason, making sure we can have a single view of them and manage their journey through that. Network, we consolidate and integrate to remove cost, to remove duplication, to simplify, and make sure we can offer a higher quality product for having a more predictable outcome for our customers. brands, as Sol has mentioned before, we're growing and we want to make sure every marketing dollar is well spent and there's a good return on it. So consolidating our brands and then investing heavily in them as well. And lastly, the boring finance stuff, but so important to make sure we can measure every step of the way, product profitability, customer analysis, very central to what we do. When we do all of this, what also comes naturally is people integration. So people then fall into those new areas of our business that are not duplicated, and hence people's functions are not duplicated. And we remain very strong in what we're very proud to have, which is a very nimble and agile organisation that can grow fast, be customer focused, but also set us up for the next acquisitions which we'll make along the road. So you can see on this slide that in a short journey of 12 months, if you look at that cohort of billing, ticketing, network, brand and finance systems, we've streamlined 32 of those instances down to 8. Our target is 5. We're almost there on it. I'd now like to move on to our network, because what's also come along for the journey is a significant expansion of that, as Sol has touched on before. So over 4,500 kilometres of increased coverage of our Sky network, which is one of our premium products. As Sol said, high speed, symmetrical, business grade, and very quick for us to deploy. And it's important also that it's one of the products which and we've heard already, we package up to take sub $1,000 customers on a monthly revenue basis on the journey to 2,000 to 10,000, especially if they want us to look after all their IT needs, and especially if they're multi-site customers. So what's happened, if you wind back 12 months ago, is we were largely Melbourne-centric, with the sprinkling on the Gold Coast and northern New South Wales. We now have Greater Sydney, we now have Greater Brisbane. We've further expanded Melbourne, including Geelong, and we've got some new regional centres in Horsham and also Morwell just lighting up at the moment. And that's seen a big shift in the proportion of sales moving, holding and expanding Victoria, but also now moving into New South Wales and Queensland. And this combined with our aggregation platform truly makes us national products that we sell. My last slide is just to expand a little bit on SpiritX. Sol went into some of the detail about what's behind it, but even further beyond that is the real magic of the tool. So our network that I've just shared with you now is divided up into 1 metre grids. And every time you do put someone's address in our qualification tool, whether it's a partner, our internal salespeople or the customer themselves, literally in 2 to 3 seconds, we're doing about between 2 to 500,000 analysis points on our network to make sure that we can connect you with one of our network sites as quickly as possible. So why is that important? We need to make sure we can connect you, and we need to make sure we do it fast. Fast is key. It used to take 24 to 48 hours. Now we get an instant response. That's number one. Number two is making sure we always sell and show the full breadth of what we can sell to the customer. The third thing is, because it's now an aggregation platform selling our network as well as other products, you'll see a blended approach to our cost to connect customers moving forward. So the more customers that we sell, there's a different mix of aggregation of on-net and off-net. And you will see and have seen in our results already a lower CapEx to revenue ratio, and that will continue as we go forward. So sales and expansion going up, but that ratio coming down, which is exactly what we want by design. So just to recap, integration's happening fast and well, and a key part of our growth. Sets us up for more products and services and a much wider network expansion. And then a fantastic digital platform through SpiritX, which take all that complexity in terms of what we can sell and simplify it and present it for our customers so they can make easy buying decisions. So I hope that gives you an update, and I'll hand you back to Sol, our MD, for some final words in Q&A.
Thanks, Mark. Well done, well presented. I think, mergers and acquisitions are always the interesting and exciting part, but for an organisation to increase its gross margins, its stickiness of customers, and hold the equity and the brand equity and the goodwill that it purchases, it needs tremendous ability to integrate. And I think Mark shows that the number of those integrations that have occurred across multiple systems, we're not just good at acquiring, we're now very good at executing integration, which is critical to the bottom line. Okay, let's move on to the next couple of points. This is a simple slide for shareholders who are considering buying the stock or potentially want to top up a bit more in terms of where we're heading. So what does the next 12, 18 months look like for us? First of all, organic growth. So as Katie's mentioned, we've bought really good intellectual property around cloud services, security services into those segments of schools. So we're moving that into Sydney and investing quite heavily in the Sydney market, both through our advertising and putting BDMs on the ground as well. We also now have over 12 engineers in the Sydney marketplace as well. So we can execute in Sydney, not just on the network side, not just on the brand side, but we have engineers on the ground. We also will expand our partnership network. So we're actively recruiting new partners and in new areas as well. And looking at acquisitions who will give us that new partner network as well. OPEX, so we have identified about 1.5 million in OPEX savings, and we have reduced OPEX to around $1 million already, partly to do with the synergies that we found in the organisations that we've acquired, but partly also by an aggressive cost-cutting mechanism that Mark has initiated as well. On the M&A side, we've got 2 to 3 good targets. And I had an institutional investor ask me yesterday, when's the next acquisition? And my answer is, it will be when the next best deal comes along. So I can assure you, once again, that we will have enormous cadence on the way that we acquire, particularly with our strong balance sheet of circa $15 million to acquire with. At the same time, and I'm not a very patient person, I can tell you that. That's probably something I need to work on as well. However, patience brings opportunity in this market. We're already seeing vendors that we spoke to 6 months ago lower their expectations materially. With every day come new M&A opportunities, and literally opportunities that I saw 2-3 months ago potentially have taken a reduction in their multiple or their expectations. Additionally, I've seen new opportunities come through, new information memorandums, new organisation approaching us to merge and acquire. So my answer is we will continue to acquire. We look at acquiring more businesses in this quarter, but to create a sustainable model for the next 12, 18 months, and this is what this slide is about, we need a little bit of patience to execute the best deals that are in the marketplace right now. And I can tell you, if you look at the deals that we've done over the last period, we're paying at fair value. And additionally, if you saw Katie come in now, we're bringing quality executives into the organisation, not just businesses. And we are doing deals with earnouts, right? So therefore the vendor stays in the organisation and the vendor still has to put effort in and execute their plan, right, for them to get the next tranche for their payments, which I think is critical in this marketplace. People talk to me about due diligence and M&A. We're living in a very different economic paradigm. So the way that we even do due diligence has to ensure that we have a forward-looking view, because looking historically on DD right now is too simplistic. You need to be more sophisticated. That's why we want vendors who want to stay, want vendors of Katie's quality and expertise, and we want vendors to have skin in the game in terms of earnouts as well. They're the types of deals that we will do. On that note, I think it's probably time for Q&A. I have Stefan here, who's our company secretary, who will moderate the questions and put some difficult ones to me that I hopefully will answer as articulately and authentically as I can. Over to you, Stefan.
Thanks, Al. First question we've got here is, why weren't existing shareholders included in the latest capital raise?
Sure. Yeah, no, really good question. So the question is, I'll repeat it, was why weren't existing shareholders included in the last capital raise? So we raised circa $9.2 million, I think it was March. So look, really good questions. We've grappled with this one as a board over probably 2-3 days. And the decision was made to move to that type of structure because of the volatility in the market. So we were more worried that the volatility in the market may impact the share price and the entire portfolio and the register would be impacted if we didn't move to a quicker placement as we did at that time. So we weren't trying to exclude anybody. There was nothing mischievous about it. But when you're looking at these raisings, we wanted to take advantage of a market that is providing quality acquisitions. We wanted to bring some institutional investors into the register that it hadn't necessarily had before. But more importantly, what we didn't want to do is have a stock price that sat there at a discounted level that would impact the entire register, which I think would have disadvantaged everybody. And as we've seen over the last few days, with the message getting out in the marketplace, we will come back to levels where we were before. So that's probably as accurate and as honest answer as I can give you on that particular question.
Do you think mergers and acquisitions
Do I think mergers and acquisitions are in the market? Yeah, good question. My answer is I think history will tell you that telecommunications providers, internet providers, it is a vertical and industry that does merge to create scale, efficiency, and improve gross margins. So my answer probably, if I look at our peer group or maybe the second level above, there isn't an enormous amount of organic growth. So I do believe there will be further consolidation and acquisitions. And that's why we're trying to build a clean asset as well. So if we're part of something in the future at the right prices, so be it. But we're going to build a clean asset to allow that to happen as well. The reality is there's always conversations that are occurring, but they have to be done for the right reasons. They have to be done for strategic fit, and most importantly for shareholders, they have to be done for the right price, right? And the consideration structure is important as well. So yes, but it's all about timing, it's all about structure, and it's all about value for shareholders on that point. But it will happen, absolutely.
Just generally, what are the impacts of COVID-19 on the business, and how much income has Spirit lost from customers? And secondly, what exposure does the company have to retail, the retail and hospitality industry in light of COVID-19?
Sure. So a COVID question, if anybody didn't hear that, really around the materiality of the impact of COVID, both on our cash flow. So I think to answer it in the context of the earlier pie graph, which is on slide 4 or 5, we've got a really diversified portfolio. We're very lucky. And I would like to say it's strategic brilliance that we acquired assets in essential services, but it was actually to do with the cross-sell that Katie talked about. So we do have some hotels, but there is no material impact to, if we're running a 4 mil revenue line, there's no material impact to report on COVID impact from hospitality or retail. It's quite diversified. You know, have we had no customers ask for payment holidays? No, but nothing material. And anybody who has had a small discount, what we've done is use that opportunity to extend the contract. But I'm pleased that there's no material impact on receipts at this point, or bad debts as a signal as well.
What is the highest speed and capacity plan you can offer, and what is the cost of that plan for the customer?
Okay, product question. So the question was on the product, the highest speed product that we offer. At a retail level, we offer 1 gig speed, so 1000 Mbps up and down. I think that product, and I should know this, shouldn't I? I think that product retails for about $8.99 up to $1,200, depending on the length of contract. So we change the price depending on the contract length. But we do have some of our industrial customers where we do what we call bespoke builds, and we can hit 10 gig as well for our industrial customers and wholesale customers as well through the air. When we lease the dark fibre, it's effectively it's got an infinite speed potentially off that dark fibre, and that's where you get the economic arbitrage coming off that dark fibre as well.
Thank you. When will the company pay a dividend?
When will the company pay a dividend? Look, I think we don't have a plan to pay a dividend in the short term. As a small cap, micro cap, we want to create value through the share price and the appreciation of the share price. So, you know, could we pay dividends off the balance sheet right now? Probably. But I think our institutional investors want us to grow. They want us to become a 200 mil cap business. So I think we reached 80 mil cap over the last few days as the price moved around. I think price appreciation is what we're heading for, as opposed to dividends in the short term. We want to be a growth company. We're sitting in the right segments. So I think what we'll offer to shareholders is share price appreciation through the portfolio of products that we have. So can't say that we'll be paying dividends in the short term at this stage. That may change, but I have to be honest and genuine that we're in it for growth and share price appreciation at this point.
What sort of level of CapEx do you require per annum in the next couple of years?
Yeah, it's a good question. So the CapEx running today is around the 300, 350 level. The answer to the question really depends on a strategic one around what we do with our fixed wireless assets. So it's a very unique product, high margin product. At this stage, the best accurate answer I'll give you, that CapEx will drop because we nearly completed our Sydney network. Additionally, Spirit X is the future from in terms of our digital distribution. So what you see is, and you're seeing that already, and you saw that in the Q3 numbers, you saw CapEx come off as a percentage of revenue. What's happening is we're selling more through Spirit X. So the CapEx is falling off. Yes, some of those products are at a lower margin, but there's no CapEx going out the door as well in terms of being a cash flow positive company. So the Spirit X will be a significant contributor in our product mix and will lower the CapEx going forward. So won't give you an accurate figure and do a forecast on CapEx, but it's definitely dropped off and falling, partly because our product mix has, and partly because Mark's nearly completed the Sydney network. So that'll be a fairly mature network, probably by July through Sydney as well.
Given security concerns over Huawei, are you concerned around the security of the Spirit network, and what will the impact of the telco rollout or 5G have on the Spirit service?
Okay. Yeah, so the question was mainly around Waihi products. To my knowledge, we don't use those products on scale at all. So that's certainly not a concern. We use a different engineering solution outside of those products. Look, 5G is a product that I think will be useful for home, maybe some micro businesses. So when you listen to some of the 5G engineers talk, they're typically sitting in their Tesla downloading. They're not using 1 gig links in a law firm with 100 partners trying to type out. So I think it is a good product, but it only serves a lower part of the market, which I think is home internet and potentially some micro businesses. I certainly wouldn't want to run a mission critical system or an aged care facility off a 5G connection. That's not something that I'd want to do. So I think 5G has a role to play, but in a smaller part of the market. And I think it is a tremendous product for consumers, but certainly not for business reliability. You wouldn't be running redundant links or high-speed links off 5G services.
The next question was, what sort of cost-cutting measures are being put in place just in light of the current climate?
Yeah, cost cutting. So we've taken around 1 to 1.5 mil of OPEX out of the business naturally. So we did do a small trim of people a couple of months ago, just to right size the organisation a little bit in the sales area, a little bit around there, but nothing material. Most of the OPEX savings that we're seeing is through the synergies that we've generated through the acquisitions with Trident and so forth. So we're seeing, as an example, the finance function with Trident has been merged. The sales organisation with Trident has been merged. So most of the OPEX have been synergy based around the acquisitions. And I think I'll point you to Mark's presentation where multiple systems have been consolidated as well. Every time we lose a system or one system, that means a lower OPEX and CapEx costs coming through the business as well. So sure, we did a bit of trimming, minor trimming around at the payroll level, nothing material. And I think you do that as good business practice anyway. But second of all, most of the synergies have come through the acquisitions and synergies and what Mark showed in terms of the multiple systems being consolidated.
And what's the percentage confidence on hitting the $75 to $80 million revenue target by 2020?
What's the percentage confidence? I'd probably say 75 to 80. So let's get the numbers right. So look, I think we do have enough in the pipeline from an acquisition perspective to get to that run rate. My answer is the percentage confidence will depend on the quality of the acquisitions and the business and the prices. So I'm pretty confident. I'd probably say 80 to 90% confident, but at the same time, I'll assure shareholders that if we miss that by a couple of months, it'll only be because we see better quality deals coming through in terms of acquisition. So patience is important. And if we don't do a deal immediately, right, it's only not because we don't have opportunities. It's only, so if you're sitting there saying I haven't done a deal, well, the reason we haven't done a deal is because I'm being patient and being prudent around using the capital on the balance sheet that we've raised that took a lot of hard work to get done as well.
No worries. And we might just have one final question here. Do you see the rollout of satellite internet offerings a threat at all?
Satellite offering, no, I don't see it as a threat. I think it's a complementary opportunity. So although satellite, I mean, it's probably best for Mark to answer this, given he'll give you a more technical answer. But look, there's been some reliability challenges with satellite. I think the satellite products are tremendous products for regional areas where there is a high cost of infrastructure. In simple terms, in areas that far out, or there's a lot of digging required, or a truck roll, as we call it in industry, then satellite's important. So we see it as a complementary product. I don't see it as a mainstream product in cities because there's enough fibre and fixed wireless hardware in metropolitan areas, but it is definitely a complementary product, and we will resell some satellite products over the next 6-7 months as well. So not a threat, it's complementary. The reality of telco is not everybody can get to one location, and that's why SpiritX is so vital as a distribution platform. We're now the largest aggregator of telco B2B services via that platform in Australia, and that's why you need it's a good question, because the context there is you need a mixture of services to hit multiple locations. When you hit clients in multiple locations, your ARPU and your invoice price goes up, and your ability to resell IT services goes up too. I'm getting the roll up, so I'm getting a time check. So I'll probably end it there unless I've missed something. I want to thank you for joining us. We've had an incredible turnout. A few hundred have joined us today, and I look at the participants and they're still there. So I wish you well. We will do this again, and during this difficult time. At the same time, I want to wish you and your family good health, and have a good weekend, and thank you for joining us again.